When I was running Magellan, 1 out of every 100 Americans was in the fund.
Yeah.
These are people that $5,000 and $10,000 was a huge deal to. So when the market went down, you felt really badly. I mean, it's really the pressure on you when it's average people's money.
Yeah. That's
overwhelming. And you're nice enough to say nice things about Magellan, but in those 13 years, 10 times it declined over 10%. You know.
Peter Lynch is here. He is a legendary investor. He is a best-selling author. He is a philanthropist. For 13 years, he ran Fidelity's Magellan Fund with average annual returns of nearly 30%. From 1977 to 1990, it grew from $18 million in assets to $14 billion in assets. He retired at the age of 46. Since then, he has dedicated his time and his resources to giving away a large portion of his personal fortune. I'm pleased to have him back at this table. Welcome. Now, see, we had this wonderful interview, and I would occasionally say, whatever happened to Peter Lynch? It's one of those things, and whatever happened to Peter Lynch is my question.
Well, it's funny, people said he'll start his own fund, he'll do a hedge fund. I said, no.
I know
I've had enough of it because
he wants to do it all on his own. Well, he doesn't need the great Fidelity, as a
Well, I have a
cover.
very small transmission as 1 gear overdrive. That's it.
Yes,
so you can't sort of run a fund. I had a lovely wife, Carolyn, 3 children.
Right.
I want to do other things, so I now work very part-time with younger analysts. So it's been my father died at 46. So
and was that the reason 46? Or
that gets you 60 in mind. He took sick when he was 43, died at 46. Maybe I was going to live to 146, but I said, I love the job, love the company, but I worked every Saturday for 11 years. I just want to spend more time with my wife and family.
And you're constantly on the road because you believed in being there. In fact, you would take her with you.
Yes, that's right.
And family with you because, in search of understanding the company.
Correct. That's right.
Yeah. And so what have you learned since then? I mean, do you look back and say, oh, I stopped too early? B, I stopped too late?
No, it's lucky. It was a perfect time. It was an absolutely perfect time. I was able to see all my 3 children grow up, and now they're all married, and spend time with my grandchildren. It's fabulous.
Tell me about your passions.
Well, I think my wife and I, Carolyn, her father was a high school principal. Her principal. She grew up in rural Delaware. Yeah. I went to public schools, and we have the best colleges and universities in the world. No one would doubt that.
Right.
But K through 12, we're not that hot.
No.
And somebody born in America today is less likely to graduate from high school than their parents. That's remarkable. Yeah. That's not true in Europe.
And falling behind in scores on math and science and engineering.
And also, 25 years ago, if you were a dropout, you could work a lathe, work a press, work a injection bowling machine. There were lots of jobs. You didn't even have to speak English. Today, it's test equipment, assembly equipment. There's low-level jobs at fast food restaurants and at hospitals. But if you want to get a decent job that's challenging and fun, you have to be able to use a computer. You have to be able to speak in English. All these manuals are all in, they're not in Creole, they're not in Portuguese, they're not in all these Spanish, they're in English. So today being a dropout is a tragedy, and it shouldn't be happening.
And once you lose a step, then you lose a second step and third step and the fourth step, so that...
And literacy, there's an amazing correlation, I think, of a couple million people in prison, like 85% of them are illiterate. It's not their fault.
Here's the thing for me. There are people, you, and so many people I know, some deceased, some in youth, but all passionate about education. Passionate. All have resources. All have a voice. Why aren't we fixing this?
Well, I think, first of all, the greatest issue is recognizing the problem. I don't think this problem was clear 10, 20 years ago. I mean, I think when World War II started, our army was smaller than the Netherlands. I mean, we didn't realize how bad Hitler was, how terrible the Nazi Party was. We have to recognize the problem. I think we're getting to the phase now we say there's 45 million kids in public school, probably half of them, 2/3 of them get a decent education, the rest are getting a not so good education. That is a huge, it's an awful, not only a problem, it's a tragedy. So I think recognizing the problem, and people like yourselves are leaders in that, just getting the word off, this is not acceptable, this is bad for everybody. That's the first part. That's starting to happen now. And now there's several things that are happening now to make it better. And I think that's very positive.
But are you convinced that we have the will to do what's necessary? The will?
Well, I think if more people recognize the problem and say, and then they say we can do something about it, then things will happen. I think we're between phases 1 and phase 2. Examples like Teach for America. I mean, there's many examples like, national mentoring. They're programs that are starting to make a difference. You can really see they make, and people recognize that really works. And people want to invest, like in the stock market, they want to invest in the companies doing well, not the companies doing badly.
Yeah.
So if they say, this is a waste, why should I invest it? It's hopeless. You have to take away that hopeless and say, we can make this a lot better. And there's examples in Massachusetts. We have these charter schools, and we have some district schools, so the public schools. They're now top in the state against some of the suburban schools. So these things work. They really work.
They do, but not all the results of all charter schools is as good
well, some
as
of the
you
early,
might expect.
You're exactly right. But some of the early ones weren't well planned. They weren't well thought out. But the ones now, plus some district schools. We're talking public schools. Yeah. There's a program called the Achievement Network that does a testing program. It's now in 300,000 students have it today. This should spread all over the country. It's something Carolyn did all the research on, my wife, and it's a great thing. They basically test the child 4 times a year, a quick test. And instead of at the end of the year saying this student is falling behind or the class is falling behind, they say the reason Johnny's not doing well, he can't add a quarter to 5/8, or Susie doesn't understand adverbs. It helps the teacher 4 times a year to find out how to help the student rather than find at the end of the year. Then it goes to another teacher next year. There are things like that are happening right now, and it helps the teacher a lot.
And we're just beginning to understand how to use technology too.
Correct.
For a long time it was there, and we did not know how to you it.
Right.
And never coming on.
The Khan Academy is a great example.
Exactly, perfect.
And then there's the importance of the principal.
Yeah.
That's something we really focus on. Because my wife, father's high school principal. Imagine the principal spends a lot of time on the boiler or a leaky roof. These are not academics. I mean, it's such an incredible job, and there's no peers to talk to. I mean, who else do you speak to? It's a lonely, hard job, and it's a difficult job. So we're working to. We started a leadership academy at Boston College to work with principals and aspiring principals to help them get the best methods, the best tools. They're the key person in America, high school principal. Then the teacher's second most important. Yeah. They're the leaders. When you talk CEOs of companies, the Jack Welches of the world, the Lee Iacocca's, that's a principal. Yeah. That's what they have to do.
Take for tangent for a second. Jack Welch, Lee Iacocca. What is it they have? What you would go around and do a self-analysis of companies, and you would look for things that you could identify with and know that they had the potential to grow, and they had a culture to grow, and they had a plan to grow. What do great managers do?
Well, there's 2 types. You have Fred Smith, who comes up with an idea called Federal Express. Then he had to grow it, and that's really tricky. Sometimes people can just do the idea part. He did all the parts. And then there's Lee Iacocca had to turn around at trouble with Chrysler, and even more challenging, a giant company like General Electric, to make something good better. I mean, that's really hard. So all these people basically were problem solvers, and they had to manage people. And one of the things that surprises people, they don't even understand the definition of management. It's getting things done through others. It's a lot easier to do something yourself. If you have somebody else do it, and lots of people, obviously you're managing people, and sometimes you have to encourage them, sometimes you have to push them a little hard.
Inspire,
people
motivate,
it's hard.
encourage.
But you have to understand what they want, you have to work with them, you have to explain yourself, you have to set goals, and you have to be a leader yourself, and you have to put a lot of effort into it. And you have to make mistakes. And there's a real amazing difference between being persistent and being stubborn. And I think great leaders to say, this is
persistence is good, stubborn's bad.
Persistence is terrific. Stubborn's terrible.
But do great managers listen?
Yes, they do. Absolutely. Categorically.
I've come to know and believe that listening is a principal, essential quality.
And sometimes managers get so high up, the people around them aren't giving them ideas. They're just shielding and filtering everything else. They don't have a chance to listen.
And the best manager will make sure they do hear the best thing.
And they go out on their own, do their own research, independent of the people around them.
Now, you still, back to you are still with the fund. I mean, you are the manager of the fund. You run the fund. She runs the foundation. You run the fund, right?
Right. I manage the money, but she finds all the great ideas.
Oh, does she really? So the division of labor is that you make the money and she gives it away?
That's right. She found Teach for America. Wendy Kopp was like 21 when she found Teach for America. City Year early, national mentoring partnerships. I mean, she's the one that's finding. We get lots of proposals. She narrows it down. She does with other people site visits. I attend some of these meetings. I mean, we have board meetings, but I'm on the investment committee. Yeah.
Do you miss anything? Do you miss about the life that you had? Or do you simply say, I have a portion of it, I'm making investments for something that means a lot to me, and I know where the fruits of my labor are going.
Yep.
They're going to improve education and other projects I believe in.
Well, the nice thing, I'm actually running money for our foundation and for ourselves. So I'm actually doing the same process.
Family fund and foundation fund.
But all I have to say, my wife is my only boss.
Yeah.
When I was running Magellan, 1 out of every 100 Americans was in the fund.
Yeah.
These are people that $5,000 and $10,000 was a huge deal to. So when the market went down, you felt really badly. I mean, it's really the pressure on you when it's average people's money.
Yeah.
That's overwhelming. And you're nice enough to say nice things about Magellan, but in those 13 years, 10 times it declined over 10%. You know. And
yeah, but your point was that you were confident enough to say, you know, when it's declining, to know when to give up and when not to give up most of the time.
Right. I mean, I'm saying when the market went down, I would always go down. So
Yeah. Sure. Yeah. But you wouldn't go scared because you'd
story.
invest in a company.
That's right. I just say if the company's fine, it's fine. I mean, basically, Johnson & Johnson's higher than it was 40 years ago. Their earnings are higher. Xerox is lower than it was 40 years ago. The earnings are lower. So
Yeah, of course.
It's what happens to the company.
But you also, I mean, I know lots of people who are doing stunningly well in the world of investments and finance. And they do it by a study of macroeconomics.
Right.
You never bought into that.
I always joke, I was bottom down. I mean, I was lucky. I mean, I owned a lot of, I own American Motor Inns, Hospitality Inns, United Inns.
Right.
And I said, who's your best competitor? And they said, La Quinta Motor Inns.
Oh, I remember this, yes.
And it was, I owned it before sunset. I mean, if somebody ever says something nice about a competitor, you know it's true. They always dump on their competitors.
Yeah. If you get them to say what they worry about, somebody's doing it maybe better than I am.
They have a better formula. We can't match their formula.
Yeah.
So I basically then visited, and I made it a big position in Magellan. It was a huge success.
Yeah. How long did you stay with it? Look.
I think 7 or 8 years along.
Really? Yeah.
Great success.
How do you know when to get out?
Well, in baseball analogy, and I know you're a great baseball fan, you want to get in the first, second, third inning, not when they're drawing up the lineup.
Yes.
And Walmart, you could have bought Walmart.
Oh, wait. You don't want to do it when they're drawing up the lineup. You want to make it to the second or third inning. You want to at least have seen them at bat.
They've got it right. They've got the formula right. And now it's Toys R Us on 20 stores on the way to 500, or Home Depot on 40 stores on the way to 4,000. You could have bought Walmart 10 years after they went public. Then it went up 50-fold. It's already up 10-fold. That's 500-fold.
Yeah.
10 years after they're public, they're only in 18% of the United States. They went to 19, 20. So you can say to yourself, there's a lot of room to go. But when you're in every state, when Limited got to every single mall in the United States, with Express and Limited, you say to yourself, they're in the 8th or 9th inning. Where can they go? Yeah. So that's how you define it. With a cyclical, when it goes from crummy to semi-crummy, you're happy. Then when it goes to good, you're happy. Then it goes to very good, you say, maybe I ought to go on to something else. So
can you be greedy in your business?
Yeah, I think sometimes I call it the 3 C's. It's called complacency, concern, and capitulation. Yeah. So you're complacent is the I don't call it greedy. Just everything's going right. You sort of forget to check the facts. You say things are starting to slip in the company. Not the fundamentals. They're starting to mature. There's some competitors coming along. So being complacent is the worst one.
And that's the one that happens most often?
Yeah, well, unless you're working hard. If you're working hard, you're always checking with competitors, you're checking with customers, suppliers. Right. You're trying to do work to find out, is this company still early? Do they have years and years of growth ahead of them? Mm-hmm. Then you stay with it, even if the stock goes down.
There's also this idea of never invest in something you don't really know. That was part of it. That's why you went out on the road so much.
Right.
If I don't understand it, I don't want to...
Yeah. The key thing is when the stock goes from 10 to 6, if you understand what they do and you know they're financially solvent, you're fine. If you don't understand it, you can call the psychic hotline. But if you don't understand it, you're probably going to do the wrong thing. If you understand exactly what they're doing, it's gone from 10 to 6, you'll buy more. If you're confused to start with, you'll say, well, there must be something wrong there. And then you're out. And then a lot of times stocks are going to decline. I mean, some of my best stocks have gone from 18 to 8, then to sometimes to 40. And some have gone from 18 to 0. But at least I wasn't adding to it on the way to 0. A lot have gone to 0.
So if it's going down, you're not adding to it? I mean, sometimes you are.
If the fundamentals are getting better or the same. But if they're deteriorating, I'm going to leave.
How much do you measure your success in your ability to communicate well? Your command of the language and the facility to express ideas in a simple and comprehensible way has always been the reason your book sold well, because there was good content there. And secondly, the way you were able to communicate and become a leader in your industry.
You asked a question earlier about ability to listen.
Right.
I think that's the skill. Because when you're talking to a company, if you ask all these questions, it's like a monologue. Then you say at the end, is there something I've forgotten?
Me too. I say it all the time.
You want to have them say, by the way, a year ago when you were looking to see what things are going to be like, how has it come out?
Yeah.
What have been surprises for you? So I'm always listening to what people say. So it's more listening rather than asking, and also being nice. When you go to a company, they'll say, last year your capital spending was $125 million. What is it going to be this year? Last year R&D was $73 million. You just don't go say, how you doing?
Yeah.
You want to be nice, courteous.
But precise?
Precise, right. But you want to show you did some homework.
Exactly.
And also, you don't want to use the rubber hose.
This is just like interviewing.
Don't be
I'm
mean.
telling you, this is like interviewing.
You don't want to be mean, too. If the rubber hose worked, I would have used it. You want to be, no, you want to be kind.
Yeah.
You write letters to say, I enjoyed meeting with you. It was a nice interview.
Yeah.
People, they could turn off. They have all the answers, but they don't have to be that nice to you. So being kind and courteous. I was a Boy Scout, and be prepared.
Yeah, be prepared, exactly. I mean, it is central to what I believe is that you ask people things like, did I miss something? You know, what am I not hearing?
Yep.
You know,
correct.
What question have I missed here? What
Yep.
you know? It's almost what I think is important. You got to engage the person in your own pursuit.
Right.
Make them work for you.
Yep. No, I remember that very well. One of the first company, I was a metals analyst.
Right.
The company AMAX.
Yeah.
The major product was molybdenum, and I was saying, what's the outlook for molybdenum? I couldn't even pronounce. When I took chemistry in high school, we didn't get that high in the chart.
Exactly right.
So you find out these people want to help you. If you go visit them, even on the phone.
Yeah.
And I remember calling one company up, and the person, you get to know a person's personality. Some people are very optimistic, they're very upbeat. Right. Some people are kind of very conservative, and his tone just was not as optimistic. I found out later, I almost sold my entire position. You get that feeling.
Yeah.
I called him a week later. He says, you were just down. He says, yeah, my brother was in a traffic accident about half an hour before you called. I didn't know whether he was going to make it or not. Yeah. I almost sold my entire position because of an accident.
But you had another question to ask, yeah.
I called back and I said, gee,
Now, I will sometimes call people and say, did I do something to make you upset or angry? Or not in terms of the interview, but just, is there something in terms of the relationship between, am I missing something here? Did I do something that pissed you off? And now sometimes they'll say, you didn't see, I was over there waiting to see you, and you walked right by.
And a lot of times you kind of be interrupting people. They answer questions, you just cut them off. You really have to be...
Listen.
You really have to say that. I've heard enough of that, but I'm not going to say interrupt, so it works well.
But you still use those skills. Those are human skills, aren't they?
But they're not taught anywhere. I mean, you sort of have to learn. There's no book on that.
I'm going to do something now I have sort of never done, but I had a friend of mine who I know admires you greatly. And I said to him, okay, just give me 5 questions you would like for Peter to answer if you were sitting at the table with him. And in 3 minutes, he sent them to me. So here they are, What has changed about investing in the market since you left in 1990? What has changed?
Well, I think there's a lot of this computer-driven things, where people buy stocks for a second and own it for a second. I mean, I think that's a waste of time. I think it's disruptive. On the positive side, information to the public is so much more available today. When a company releases their numbers and they have a call, it's open on the web to everybody.
Right.
All the information. We used to wait for the mail to come to see what Nike's inventories were like. I mean, we find out we get in our library in the first class mail. So all this information. So the investing for the average person now is much clearer. They know the same thing as I do. Yeah. They have all this. You don't want to invest in a company whose balance sheet is they got $8 billion in debt and they have no cash and they're losing money. That's a terrible combination. You get all the information now. So information is a lot better than it was a long time ago. You
still believe in the investment mantra that you were often credited as your mantra, which is invest in what you know.
Yeah, I'm amazed if somebody. Imagine you spent you a long time in your field, in my field. Imagine if you were in a mall the last 30 years.
Yes.
You would have seen the Gap. You would have seen Best Buy. You would have seen Circuit City. You would have seen these companies that are crowded doing something better, and they're buying biotechnology stocks or oil companies. It makes no sense to me. If you're in the steel industry, you see it go from awful to better. Yeah. Why don't you buy a steel stock?
We expect mutual funds to know that stuff. No, obviously.
Well,
if you're managing,
but they're ahead of us.
If you look at Magellan or you look at BlackRock, you think they must have access to the best information in the world.
But they don't have that. They're not in the steel industry. They don't see things get better. The way they don't see the chemical industry turning as soon as the people in the chemical industry do. I mean, you could be in the plastics fields or lithium, whatever it is.
People in the business see it first.
And that they see it first. Or they don't. But that's,
go ahead.
In a mall, imagine the companies you've seen, the Dunkin' Donuts. It goes on and on. Walmart, Stop and Shop. These are all companies that really got better. And some say, gee, I'm shopping there. But I'm not saying people should. If they want to invest, they ought to do the same kind of research they do when they buy a refrigerator. They take a trip to Italy. Do some homework.
You know what is about this country that is stunning to me? For the most part, we don't do that about medicine and our health. We don't do it. We are more interested in getting the best television than we are the best medical.
Yeah. No, I agree. I mean, the diagnostics, talk about improvements, the diagnostics today are so much better.
All right. The other thing is, what advice we give to young investors who almost certainly will have more direct responsibility for their retirement savings than their predecessors, of which I'm going to talk about later.
Well, I think the advantage of putting money into a retirement fund, obviously a Fidelity fund I would prefer, but index fund, whatever it is, put some money aside. It's going to compound tax-free.
Yeah.
Start saving earlier. The numbers are amazing.
Compounding will do wonders for you, won't it?
But until you want to invest directly in individual stocks, start a paper portfolio. Say, I'm going to buy these 10 companies, and then write down in like 5 bullets why. What's the reason I bought those? And then keep checking a year later, what happened? Did they really keep growing, or did a competitor come along? Do a paper portfolio, and you can do exactly what I did with a real portfolio and find out, what am I good at? What am I bad at? Am I really good at turnarounds? Am I good at small growth companies? Maybe I pay too high for stocks. You can do this over 4 or 5 years and learn what's your skills, and then specialize in that. I had owned thousands of companies. You know, the average person, all you need is a few in a lifetime.
Yeah.
Make a difference.
When you were running $14 billion,
right,
did you see in your mind's eye, and then let's assume a lot of it was pension fund money and whatever, but did you see individuals, I'm investing for the fireman down the street? Yeah. Did you?
It was almost.
Or was it a game?
It was almost none of it was pension fund money. It was almost all individuals. People.
Right.
It was incredible, that thrill.
Yeah.
I got letters when the market went down to 87. My fund went down like a rock.
Yeah.
People were writing letters to me, cheering me up.
Oh, really?
Yeah. Oh, yeah. No complaints.
Mr. Lynch, you've done well for me.
Yeah. No. Hang in there.
I know, hang in there, boy.
We'll be okay. You know. No, it's amazing.
Don't give up now, Peter.
No. It was. I meet these people all the time, at airports, all around. They're still. It was wonderful. It was the greatest thrill of my life. Our children and my wife managing money for other people.
Now we've also seen sort of today the whole business of hedge funds and private equity and shadow stuff. And now they're talking about getting into the mutual fund business. You think that's...
Yeah.
What do you think of that?
I mean,
hedge funds getting into mutual funds.
Well, a couple of differences, between a hedge fund and what I did in Magellan.
Right.
I could only buy long. I couldn't short.
So you couldn't sell short, right?
But I couldn't buy
hedge funds
commodities.
Can't sell short, obviously.
Right. I couldn't buy commodities. I couldn't short the euro. I mean, they're into a lot, and they do it on leverage, a lot of leverage. So you have to be careful what you get into. There are some hedge funds that are very conservative. They're only going to be 20% short, mostly long. Because the nice thing about occasionally, if you have an idea, if I found an idea that I thought was overpriced, I just went on to the next thing. I couldn't short it. So there is an advantage to be able to short, but I found that long only.
Well, but with these hedge funds who get into mutual funds, I mean, they'll have to also live up under the rules that mutual funds live under. Do you think they will be successful? I mean,
well, I found the long.
They're obviously attracting some.
The hedge funds that have been on the long side have done the best. I mean, they may have a little bit by being short, but being right on the long side. Because obviously, if you're right, you can make. And that's, I would say, when I ran Magellan, I might have been right 6 times out of 10. But if I'm right, I make a double or triple occasionally. It offsets the times you lose 30 or 40%. In fact, you could be right a third of the time as long as you have a lot of good results. So that's when you're short, you can only make 90%. When you're long, you can make 10-fold or 5-fold. So I think long is the way to be.
Optimistic.
Optimistic, yeah. Well, careful and optimistic. That's a Red Sox fan.
Yes,
yeah.
No, it's like the old man, the person who said, I'm very optimistic. Then, well, why do you have that crown? He said, I'm not certain about my optimism.
That's good. Wow.
And so when you look at the market today, it's a good time for
I think
investors to be there. I mean, obviously we're seeing new highs.
Right. I think the market is fairly priced on what's happening right now. You have to say to yourself, is 5 years from now, 10 years from now, corporate profits have grown about 7 or 8% a year. That means they double, including dividends, about every 10 years, quadruple every 20, go up 8-fold every 40. Yeah. I think that's the kind of numbers you're interested. That's better. A 10-year bond today is a little over 2%. So I think the stock market's the best place to be for the next 10, 20, 30 years. The next 2 years, no idea. I've never known what the next 2 years are going to bring.
What do you want to accomplish in the next year of your life?
Well, I really like to work with my wife and still take some more vacation time.
Yeah?
And
so what do you do on vacation?
Well, we like to see something new. This year we went to Turkey and went.
Oh, it's fascinating. Istanbul, but not just Istanbul.
Cappadocia.
Oh, yeah.
Remarkable. And
oh, it's amazing. I mean, that's one of the world's great cities now.
Oh, and then went to Santorini at the end of it. And it was great sailing trips. That was, and two of our daughters and their husbands went with it. It was a great trip. So I like to see. You know, I've been to Russia. I've never been to St. Petersburg. You know.
Oh, you got to go there.
I've been to Israel. I loved Israel. I'd love to go to Jordan. I mean, there's a place I'd like to go to.
See, isn't that great?
Yeah.
I mean, there's so many places you haven't seen. I mean, well, you just think about it. How many places do I have that I haven't seen?
I'm going to have this year. I get to North Dakota, so I've been to all 50 states now. I went on a research trip.
You go to Fargo?
Dakota. Actually, no. I went to Minot and parts.
Yeah.
I actually looked at hydraulic fracturing. So I'm
You're looking at hydraulic fracturing to see
if it works. I mean, does this process really work? It does.
It does.
It really works.
And it'll change America's energy future.
Remarkable.
Yeah.
Remarkable.
It's one of the great sort of...
Oh, what a breakthrough. My goodness. Imagine producing all this gas and gas at $2 an MCF where people in Europe are paying 10 times that price.
How did you decide it worked?
Well, I really could see this process. Well, first of all, you talk to somebody, so wildcatting, as you know, usually you drill 4 wells and you're lucky you hit on 1 out of 4.
Right.
These are all either A+ or B+ wells. You don't ever hit an F.
Yeah.
So it's just a question: what cost can you do it at? And you own the land, so it's and the costs are still going down. They're doing it faster, quicker, less sand, less water. They're just doing a better job.
Are there environmental threats coming out of it?
Well, as you know, they're usually about 11,000 feet, and the water table is around 2,000 feet. So if you make a mistake, it goes down. It doesn't go up.
Exactly.
So they can make mistakes.
Yeah. It's great to see you.
Okay.
Pleasure.
Always enjoy seeing you.
Peter Lynch.